Hey there. Thank you so much for being here. I'm talking to Bobby Raymond and Brightway Insurance. Super excited to have you here because I'm realizing as I'm having these conversations about condos, people don't really understand the insurance part of it. And it's a massive, especially in the state of Florida, dealing with insurance is a huge issue right now as we have literally on the heels of Hurricane Milton coming through. I can't even imagine what the impacts of that are going to be. But we're specifically talking about condos today, and Bobby's really uniquely qualified to talk to me about this. He owns his Brightway insurance brokerage, which is nice. And in fact, before we even get started on the condo thing, can we talk a little bit about what a brokerage is and why that's so cool?
Sure. Well, really, thank you, Lesley, and I appreciate you having me on.
Yeah.
Brightway is a franchise, and we are based here in Jacksonville, Florida. It was founded here, but we're in, I believe, 32 states now at this point. So each franchise is individually owned and operated. One of the things that the franchise really gives us the benefit of is pooled production. So each one of our agencies is really an independent agency where we represent over 100 different carriers. So in Florida, for example, where home insurance is very difficult, we've got basically every home insurance carrier that will quote insurance in Florida. And then even more beyond that, when we have a difficult situation, we need to go beyond the standard carriers to what we call a surplus lines carrier. People think of surplus lines, they'll say Lloyd's of London, carriers like that, where they're not filed in the state of Florida, but they will issue policies in Florida that are not as regulated as tightly as the standard carriers. So we're an independent agency. We shop the coverage for all of our clients for every line of business, whether it be homeowners, condominium, auto insurance, or commercial insurance, whatever the case may be. We're going to be looking at many different carriers. And as an agency, we can also we can access brokers who have access to other carriers we may not be directly appointed with, but I can go through many brokers who themselves have many more carriers they're appointed with, and I can shop and quote those as well. So we can go very deep into shopping when we need to, and that's basically what an independent agent does.
That's awesome. And it's so cool because you do have all of those options. You're pretty much a one-stop shop to shop anything that you need for insurance, which is amazing. Y'all do my commercial insurance. Y'all do all of our stuff. So I love it.
Yeah.
Brightway. But all right, so let's talk about condos. One of the reasons that I wanted to have these conversations that I'm having over the next few weeks is because I think there's a lot of confusion, there's a lot of misinformation, and and a lot of confusion for very good reasons right now with condos in the state of Florida. Um, but one of those is insurance. People don't understand when it comes to your homeowner's dues, the one of the major components of your homeowner's dues every month is set by the master insurance policy for the entire community. And then you're also
Right.
going to have if you're getting a loan, I mean, you're also going to insure the contents of your condo. So there's two insurance
Condo.
policies, but talk to me, kind of explain a little bit
Yeah.
of that because I know people don't really get it.
Sure. So let me explain the difference between a condo policy and a homeowner's policy, for example, and then we'll talk about the condo association's policy. So with a home insurance policy, you're insuring your own entire building. If that building was to be struck by lightning and burned to the ground and had to be rebuilt from scratch, your policy on a home policy would pay to build the entire building, the roof, the shell, the interior, all the finish work, the cabinetry, putting the appliances back in there. Those things are considered personal property. So you have a limit for how much you insure the home for. What's the cost to rebuild that entire home from the ground up? And then you also have a limit for what we call coverage C, which is your personal property. And that's everything inside the home that's not permanently attached, like plug-in appliances, washers and dryers, all of your clothes, your handbags, your shoes, your lamps, your couches, furniture, all those things are your contents. So in both the condo policy and a home policy, you have building coverage and then you have your contents coverage.
Mhm.
But the difference with a condo policy is that in the case of a condominium, the condominium association is responsible for the buildings themselves and all of the shared, what they call common property. Okay, so the driveways and the detached structure, the clubhouse that a lot of associations have. Same things that exist in a homeowners association. You might have a community pool and a community clubhouse, and your association dues are based on what's it going to cost to maintain and insure those assets in a homeowners association. With a condominium association, not only do you have those things, you may have a clubhouse, a pool, all the things that go with that, security, gates, all those kind of things that you're maintaining as a group. Everybody's pitching into the association to pay for them. But with a condominium, the association has to have the insurance and pay to rebuild the buildings themselves. They rebuild basically the whole building and the shell. The only thing that they're not responsible for is to rebuild the interior of your condominium. So what a lot of people like to call it is from the drywall in is
Mhm.
what you're insuring under a condominium policy. So as a general rule, in many cases, most cases, I would say, a condominium policy is less expensive than a home insurance policy because the homeowners association or the condominium association has to build the whole building. And this might be a 3, 4, 5 multi-story building. And they're just not going to do all the finish work once that square footage of your condominium exists. So, as a general rule, on a home insurance policy to build an entire home from the ground up, on the low side today, we have to calculate $200 a square foot to rebuild. Okay.
Okay.
And a custom house with high quality features, it could be quite a bit more than that, but that's on the low side, $200. And for a condominium, we'll typically use $100 a square foot because we're only building out the finish work from, they like to say the drywall end. It can really be things behind the drywall, like the electrical conduits that run to your chandeliers and to your light switches and to different electrical things. That is completed at the owner's expense as well. So a condo policy is paying to rebuild the interior shell of that condo. So if your building gets blown down by a hurricane or burns down by fire, the association's insurance, which could be quite expensive today, where the entire association is sharing the cost of insuring that whole building. They're going to rebuild the whole building. They're going to recreate your square footage, and then your policy is going to pay to go finish that square footage, add the drywalls, the partition walls, and the cabinetry, all the finish work, electrical, that kind of thing. So really, you've got two pieces in the condominium situation: the condo owner's policy and then the condo association policy. And with the association dues, you're pitching in your share for the association's policy. And because of what's happened in Florida, because of new regulations, yes, those policies in some cases have gotten way more expensive because of the new regulations. And so people are seeing some pretty big association cost increases as a result of that.
Yeah, and I mean, the concern that I always get from people, and the thing that people don't necessarily understand about condos, like we were talking about earlier, when people come to me looking at a condo, they say, well, they can increase the association dues, and
Right.
they isn't, as if it's some unknown entity, and it's the homeowners association, which you would then be a part of. So you were there, and so you were there helping make that decision. And if you're involved in your condo association, you understand what's happening with the insurance policy, which usually makes up the bulk. It depends on the association, but typically that makes up the bulk of the homeowners association dues. It's not a for-profit company. It's covering the necessary expenses of the condo association, much like you would
Right.
have to do with your homeowner's insurance policy on your individual home. It's the
That's
same
right.
thing. It's just kind of paid in two different parts instead of all together, which I love the way you explained that, because I hadn't really put two and two together about that, how your home is insured as well. There was an
Yeah,
interesting
and
explanation.
in a subdivision full of a bunch of homes, if you have a homeowners association, which most subdivisions do now, they have some common areas. And, they may not have even a clubhouse, but they do have streets and they have street lights and they have cul-de-sacs and little islands here and there that have to be manicured. So they have some common areas where they got to pay a landscape maintenance company to come, every week and mow the grass. They'll have retention ponds, obviously, which are lakes, and those have to be maintained. So for some homeowners associations, the annual cost of maintaining what's there is very small because they don't have any big building structure that they're insuring. And so it may be a fairly small cost, but your homeowners association dues are made up of what's the cost to buy the insurance for the homeowners association? If there's not a big building, a big clubhouse or a community pool or those kind of things, well, then that's going to be a lot less expensive than one that has a lot of community property. And the thing about condos is, by nature, they are community property. I've had
Well, they
many
are, you own
people.
from as you're talking about insuring from the drywall in. The reason is that separate condo policy is because you own from the drywall in. Technically,
That's
you don't
right.
own the
That's
building.
what you own. You don't own the building. You
You don't
just
own the
own
common
that
area.
square footage. And I've had people call up and say, hey, I'm buying this condominium. I really don't need condominium insurance, do I? Because the association has their own insurance. They're going to insure the building. And I say, well, you're correct in that the association is going to insure the building. But what they're not going to do is insure your interior space. Their job is to rebuild that building, the shell of it. That'll include they're responsible for the maintenance of the roof, replacing the roof when the time comes to do that, the paint on the outside of the building, taking care of maintenance there. If there's wood rot and they need to update that, or cracks in stucco and things like that, they got to pay for. But when it comes to your unit being damaged and maybe a hurricane blew out the windows and the interior of the condo got all wet and destroyed, your own policy is what pays to build the interior of that condo back. And it provides the contents coverage that we talked about, that you also have in a home. And one thing I will say, a big driver of the cost on a condo policy is the contents coverage. Someone that just has a condo, maybe it's a vacation home, secondary home, they don't have a lot of expensive furniture in it. If their contents coverage is lower compared to someone who has a whole lot of fancy furniture in there, that contents coverage will affect the price quite a bit.
Sure.
So while we figure the cost to insure the interior, and we default, to $100 on the low side, if you got a really fancy place, again, with a lot of nice finishes, then we would go up from there. But so, a 2,000 square foot condominium, we should generally insure for 200,000 is about what it would cost to rebuild all that interior and refinish it. Now, how much do you have in contents in that 2,000 square foot condominium? Is it 25,000? Is it 50,000? Is it 100,000? Is it 200,000? And that will make a big difference in the premium. So we talk about that with our clients and determine what are their needs. And you don't want to overinsure it. So you have the same thing with a home. Your contents coverage usually defaults to 50% of what the home is insured for. That's a default level. But if you don't need that much, you can go lower with most of the carriers and choose a lower amount.
Yeah, I love that. Well, and so I also want to talk a little bit about, because what we're seeing in the real estate industry, what we're seeing in condos and the condo insurance, the master insurance policy, is because those are getting so expensive, the homeowners in the association are opting for a lower deductible master insurance policy, which is certainly understandable, or a higher deductible. Sorry, I said that backwards.
Exactly. Higher
deductible insurance policy, which is going to be a less expensive policy. The concern as a realtor versus an insurance professional is a lot of the lenders aren't going to want to lend in a community that has that higher deductible insurance. So can we talk a little bit about the deductibles and kind of what that means for people?
Yeah, and let's talk about deductibles, because in Florida, you really have two deductibles. You have windstorm deductible, and then you have your all other perils deductible. So you'll typically have one deductible that may be, let's say it's $1,000 for all other perils. That's, fire and lightning and water damage and, any other covered perils under the policy other than windstorm. If you make a claim, your deductible is $1,000. But the windstorm deductibles in Florida with either a condo or a home are typically a percentage of what that home is insured for. Okay, not a fixed dollar amount. And the most common is 2% of what the home is insured for. So if we insured a home for $200,000, 2% of that would be a $4,000 deductible. Okay. If we insured the condo for $200,000, then a 2% windstorm deductible would be a $4,000 deductible. But if anything other than windstorm causes a claim, well, then we might have a $1,000 deductible. And both of those are flexible. What you're talking about, the association has the same thing when they insure the building. They're going to have the all other perils deductible, which may be a fixed number rather than a percentage, or in some cases it can be a percentage. But then they're going to have the windstorm deductible, and windstorm is defined as a named storm. If it's a tropical storm and it has a name, that's when the windstorm deductible applies. So that could be a tropical storm or a hurricane. So,
and that is different, by the way, than flooding, which is rising water.
Correct. Right. Flooding is not covered under your condo policy. It's not covered under the Condo Association's property policy. A flood policy stands by itself and is completely separate, where the associations also have to buy flood insurance. And that's another expense that they're spreading amongst all of the condo owners.
And that's going to vary depending on the location of the condo. And I mean, there's a lot of things that play into that. Yeah.
That's right. And those costs are borne by all of the association members, all the condo owners. They're all splitting up. What does this cost every year? So that's how the deductibles work. And what you're talking about is the associations today, because the insurance has increased in cost quite a bit, especially when you get close to the coast. When you have condominiums that are in our area here in North Florida, Jacksonville, they consider the wind pool. Okay. That's any area that's within 1,000 feet of the ocean. That's considered the wind pool. So buildings that are in the wind pool, the windstorm insurance is going to be a lot more expensive than, say, a building that was built the same way, same square footage, same characteristics, but yet it's 5 or 10 miles away from the ocean. You'll see those association policies probably much less, because the closer you are to the coast, if we get a close bearing hurricane, you're more likely to get the really heavy winds for it versus those that are further inland. So, these associations are choosing, in order to try to cut their costs down on that insurance, they're going up to these higher deductibles. Instead of the traditional 2%, they're going to maybe 5% or maybe 7%. And that's what you're running into in some cases that you want to be aware of. And the other thing that's related to that people should know about is, on your own condo association policy, they have a limit that kicks in for assessments. And that means assessments are when your association, your condo association, has a budget. They charged everybody what they thought their costs were going to be to cover all their annual costs, but yet they have something like a hurricane hit, and those costs end up going much higher. They have to pay that deductible out of pocket. And so in order to cover that and get the cash to pay that deductible, they have to assess all of their condo owners. And so that there is a coverage in your own condo policy that covers that. But what we're finding now is most of the personal insurers on the individual condo policies, in many cases, the maximum you can get is just $2,000. And today you're seeing exposure of more than that with some of these high deductible association plans. So that's the risk, and that's one of the factors that you want to be aware of, is how much does my personal condo policy provide me in the form of an assessment if the association has to assess me for a loss they had under their own policy. And what the rules say,
huge right now, considering everything that's going on with condos. If they're doing the structural integrity studies on the building, or they're, and they should all be doing the, and I don't know why I can't remember the words reserve study, but to do the reserve study, that we're coming up with assessments, we're seeing them, which is why we're
Right.
seeing condos. We're definitely in a buyer's market all over the state of Florida with condos, and it's because of the nervousness of some of these things. And I think people feel like they're writing a blank check. This level of protection that you're talking about, that was potentially in your built into your homeowners insurance, your condo
Mhm.
insurance,
Right.
isn't ending up being that much protection.
Generally not. There's a few carriers that might offer more, but we're seeing, even those that used to offer a bigger option at a reasonable cost, they've cut them down now. Most of the time, the most we can get is $2,000, and the default level is just $1,000. And that used to be pretty good, but now with these much bigger deductibles that some of the associations are picking, there's a much bigger gap, and that's not a whole lot. So it is an exposure that people want to be aware of.
Interesting. Yeah. And that's one I hadn't thought about. So that's kind of huge.
Yeah.
Well, and we're definitely seeing, I think most lenders we're seeing, in order for conforming limits for Fannie, if you're underwriting a loan for Fannie Mae and Freddie Mac standards,
Mhm.
they're looking for 5% less deductible. But we're seeing a lot of homeowners associations choosing that 7%, which then affects how you can it affects the lending on it. So it's
Yes.
going to be interesting over the next couple of years to see how this shakes out, because it's not going to shake out in the next 2 months. It's not going to shake out by the end of the
Mhm.
year. It's going to be
That's
over.
right.
I believe it's going to be over the next couple of years that we really see it shake out.
Yeah, and it's really all of this is a result of the big, made national news, the condominium in Miami that collapsed.
Right.
And there were engineers that did studies on that and recommended to that association, hey, you really need to fix this. The association voted to kick the can down the road. They didn't spend the money to fix it. They didn't assess all their owners the money it would have cost to do it. And maybe they were in the process of trying to accumulate that money,
Mm-hmm.
knowing they needed to do it. But because that building collapsed, the legislature then decided we need to regulate this more strongly, and they created these engineering studies that are being required now,
It's
and
important,
and
but
which
it's
by
expensive.
themselves, yeah, the engineering study may come out great and show that you don't need to do anything as far as maintenance, but you still got to pay an engineer, and that's a cost that a lot of these condos didn't have a year or two ago, and they've
Right.
now become effective, and they're all forced to spend that money. And then when the study says, "Oh, you've got cracking, and you've got, some of the rebar is starting to rust inside this concrete," you're going to have to strip that down and treat it, and that stuff is expensive, and that's where people are seeing the big assessments with some of these associations. And so you want to pay attention to that when you're buying the condo. Is where does this association stand? Have they had their engineering study done? And what were the results? Are they going to have a really big expense coming up next year? And
Mhm.
is that going to make it more likely that I'm going to be assessed for that? You want to know that. And that's what your realtor can do for you, is look into those things for somebody buying a
Yeah,
condo.
absolutely. Well, is there anything, are there any questions that you think I should be asking that I'm not asking about condos? Like, have I
No,
missed any?
I would say the one thing that's important that people overlook many times with a condo is in Florida, you have a law on policies that insure buildings that they can qualify for wind mitigation credits. And these credits, wind mitigation credits, really have to do with how the building is constructed. A lot of it will have to do with what year the building was built. And was that building built up to the current hurricane codes, the current building codes for windstorm limitations?
Mhm.
And most of it has to do with the roof. Okay.
Right.
And but some has to do with the building and whether or not it was built to the latest hurricane standards or not. But more of it typically has to do with when was the roof last replaced, and was that roof built up to the current Florida building codes?
Mhm.
But also, how is that roof tied down? The roof trusses themselves, are they tied down with what we call hurricane clips or hurricane straps? Or is it a concrete roof that's, fastened with even stronger connections? But because it's the association's responsibility in a condominium to replace the roof, then it's usually the association who needs to be the one that gets a wind mitigation inspection completed. And that one inspection can be for the benefit of all of the association owners, all the condo owners. And so when someone calls me to quote a condominium, one of the first things we'll ask them is, can you get a wind mitigation inspection? And the association should give that to you, because they should get it done. If they've recently replaced the roof, then they should get it done at that time. And maybe if the roof wasn't recently replaced, they should have one on file, because it can lower everyone's costs. And it can also lower their costs on the association's policy as well. So a lot of people never bother. Sometimes people will quote condominiums and they don't apply those wind mitigation credits. Those credits can be substantial.
Yeah.
And they can save you 30%, sometimes even more off of the annual premium. So we always ask our clients, check with the association, ask them if they have a wind mitigation inspection that they can share with us. And with that, we can document what the discounts are. We upload it to the insurance carrier to validate that discount. And that's something that can really be substantial savings.
Yeah. Oh, and that's good to know. And that's on the condo policy, not just on the master policy. Is that what you're saying?
Correct. That is on
Okay,
each
that's
individual
very good to know.
condo owner's policy. So you can, again, and these things make substantial discounts, when we get closer to the ocean. So having that in hand can really save you some money. And it's not just for the association. So, and many times, especially the high-rise condominiums, the individual owner can't do their own wind mitigation inspection. They
Right.
can't, an
Where I have
inspector
that done
can't
on
get
every home.
access to that roof. Yeah, for
Yeah,
the
I mean,
big
if
buildings,
I've got a single family home, I'm always making sure that there's a wind mid. I mean,
that's
as a
right.
professional for almost 20 years, I mean, this we know. I mean, that became a thing since I got licensed,
Right.
but it's consistently a thing. But I
Yeah.
don't think we think about it unless we're being asked for it for a second floor condo.
Yep, and so you should ask the association. So
Yeah,
you're not paying for the inspection, the
right.
association pays for it once,
It
and
should
they
be
should share that with everybody that's in the association. And
sure.
we have come across those that have never done it, they don't have one on file, and they really should. And more
Absolutely.
cases than not, those are when the roofs are older and they're getting close to the date where they need to be updated. And it's pretty common when the associations have recently replaced the roof, then it's more common that they will have one on file. But it doesn't mean, an older building can't get one. They can. And
Well,
sometimes
and
it
at
can
this
make a big
point,
difference.
even the older roofs are still new enough often to have it.
That's right. I mean, you think
Yeah.
about it, the building codes were really updated in 2002. Those are the
Yeah.
last major updates. They really haven't changed since that time. And a roof that was put on in 2002, well, that's 22 years old now. Pretty
Yeah.
common, especially if it's a shingle roof. Shingle roofs in Florida have to be replaced within 20 years. The carriers really won't accept them beyond that age. So it's pretty common, that the roof has been done within
Mhm.
the last 20 years. And if it has, there's some credits there that you can get to lower your costs.
That's awesome. Well, all right, and we're about out of time on this because we're kind of limited on the time with the Zoom, but thank you
Sure.
so much. I really appreciate your time. This was really informative, and I know people are going to appreciate having the information.
It's my pleasure, Lesley. It's nice to see you.
Thank you so much. Nice to see you too, and I'll talk to you soon.
Okay.
Take
Bye.
care. Bye.